Hello traders, and welcome back to the moving averages section. This video is on breakouts, so we'll show you what we mean by this. Okay, so if we zoom in, this is all about following the trend, mainly. So as you can see here, market has come from a nice area, broken out of a trend line. It probably couldn't be extended to here, but yes, it's broken out of a trend line. It's come to a nice level of support. At the same time as that, it's broken below the moving averages, which however are still pointing to the upside. When you get this bullish engulfing, you can then either look to go short or take a short straight away at the candle close. So this is daily time frame, so you can take it at 10 p.m. GMT or wait for a 4-hour candle close, or look for a setup and low time frames, etc. But so that's 40 to 60 pips. So extra 20 pips, better. Take profit will be up at, this is a monthly, so we're looking for price to make a higher high. We'll put our Fibonacci on and see for our target. Okay, so I can see our key levels with a Fibonacci now. We can plot our target. Yeah, so that's the high we're going to go for. Target first and second, which was both reached. They both reached quite nicely. As you can see, 2 to 1 or 2.5 to 1, and would have gone for here maybe, and 3.5 to 1. So quite a nice example there. Another example, once again following the trend. So it's below here, whip back above. It's not quite an example because it's a bit of a fake out, it looks like. So if you want price to be trading below both of these two MAs, then to break back above. It's quite key that it's trading below both MAs, the 21 and the 9. 50 isn't so important in this one. So just remember, it's all about following the trend. So as you can see here, here was a nice whip below, pull back, whip back below these, take a short trade. So probably around 60 pips or 46, let's say 50 pips above the high of this candle. Let's see if we would have got stopped out or not. 165.53 would be where we would put it. $166, sorry. So 167, 22. So yeah, we would have got stopped out. Maybe just got stopped out, and you can see it whip back below. So sometimes you can get these little stop raids. In this case, if you find a high like this, just slap it on the high or just above the high, just to be safe, because it's not many extra pips, but it does cover you twice over. So we'll go through that in a section about stop losses. But as you can see here, this would have been a much better stop loss placement, just because this is a swing high and you're coming down. So if it was a thing where you're doing a Fibonacci play, which looks like a 61.8 play potentially, yep, you would put your stop loss, you wouldn't put it there, you'd also put it probably around here, in between a 61.8 and a 78.6. Take profit. First is always a 0, or watch it around a 0, but your first target would have been here. Once again, you do watch it around the key level because you do have a key level of support just there. Okay. I think we'll go to different pairs because this is going back towards Brexit, so price action was a bit choppy around that time. You can also scale down to different time frames to find this, but we'll just show you on a daily time frame. In fact, no, we can show you on the 4-hour as well. Let's see if we find any immediate. Okay, here's one. Price above it, whips back below the nice bearish engulfing. Stop loss would be, there's a safe option. Put Fibonacci on so we can see our targets. Yeah, stop loss there. Target here, 2 to 1, as you can see, hit quite nicely. That's all by identifying, because some people wouldn't have taken a short just because, first of all, if they didn't put an order, we'll do a section on how to place orders. If they were waiting for price to sort of come into your area, didn't quite reach your area of resistance, so you may not have gotten on board with that trade. So this is a good way to find those opportunities that you wouldn't always find when looking for sort of price to hit your level of support or resistance. So price wasn't really trending too well around here. So this works much better when price is trending. Or we can show you an example on a 4-hour time frame. So on this here, so here's a great example. Price came back to a level of support below your moving averages, whipped back above with this candle just here. Take a long with your stop loss. Once again, on this currency pair, this is a major, so you can put it around 20 to 30 pips below the low of this candle. 124.59. So we'll go for 124. We'll try 39. That's a bit high. So yeah, we'll go for the full 30 pips below the low of this candle, which will make it 124.29. That is a safe stop loss. Take profit here, 3.6 to 1. If not, some people will wait for the crossover. The crossover did come just here, so potentially would have got long the close of this candle here, which gives an even tighter stop loss. Once again, with this one, I will preferably go with it's the same thing. That you can either go with the stop loss being 30 pips below this low here, or just below the low here. So either way, it's in and around that region just here. Okay, so in and around that region and that region. So difference in a size of stop loss isn't major. It's a difference of 5 to 10 pips. So in the 80 pip stop loss, it's not a major thing to have a difference of 5 pips. So just here, just to show you a good example, we'll go for another example for you here. If I remember correctly, there's one around here. So price is trending lower, trading above the moving averages, whips back below just here, also in line with a level of resistance. So take your short here, stop loss 30 pips above this. So 125 126.05, sorry, will be the stop loss. Around there, take profit. Also, you're expecting a new lower low, so you can go to the next level of support, or put a Fibonacci on. Or we like confluence, so we always put a Fibonacci on if we can. So potentially we've gone for this here as our first take profit, and then we'll go for the next one. Would have been down at this support and that support. Okay, so there's quite a big range between these two levels of key levels of support. So if we can't find any levels in here, obviously we do have the trend line to watch out for as well as our sort of mental take profit. But I do believe that yeah, the 61.8 was a good area to put it. Other than that, I can't see too much in the way of support. Maybe something here potentially. Okay, so something in and around is quite difficult because price hasn't really acted off any of these areas. That right there. Okay, then when we go to just below the 27.2, would have had to watch that level. Still over 2 to 1. But as you can see, that was a nice trade opportunity. Finally, we'll go on to Euro Yen. Okay, so with this, we'll look again and see. I can see one straight away. Here is one. May have got stopped out, but we'll have a look at that. The first one I'm seeing is, okay, so long position. With this, it is a yen currency. You have to be quite generous with the stop loss. The low of, yeah, definitely would have got stopped out on that trade. Probably for break even, because when the price is all the way up here, we will move our stop loss. So it doesn't always work, but that is where the breakout candle is. Stop loss below, probably just below these lows, because instead of putting it just below the candle, we do have a bit of a mini swing low just here. Okay, here we've got stopped out, so it doesn't always work, but if you do have a swing low like this, sometimes if you do put it just below the breakout candle, it can go back to what the original swing low, just to take out the stops and go long. So with this, you have to be wary. Trade it on demo account first, or just watch it and then see how it plays out with the currency pair, because with these strategies, they do play out differently with different currency pair a lot of the time. Here we do have Euro Yen broke below, whip back above, so I'd say this candle here, we couldn't go for here as a stop loss, but that's always a safe option. So if you do have a swing high that's just before the breakout candle, do use the swing high or the swing low in this case here, and then take profit, of course, first potentially here, second up here. Okay, that's a nice example just there. As you can see, price was just consolidating after going long. We did go for this example before, as we were maybe going short if it broke this box consolidation, but it didn't. So that's when we look for opportunities to go back long. Okay. Alright, so I think that is the end of this video. Just a quick one on breakouts. This is a bit harder to master than others, so do practice this quite a lot to see if it works for you. This is a good strategy, works for us quite nicely, but it does take quite a lot of experience and knowing how your currency pair moves, and also what keys to look for in terms of price action when trading it. Okay, so the next video we will just do a quick overview on sort of using counter trend lines with the moving averages, and then that will be the end of the moving averages section. Okay, so thanks for watching this video. You can now move on.